Hey everyone, welcome to your Maven Money Talks podcast. I'm here today with John Soricelli.
What's up, Duddy?
Owner of J&J Coastal Lending. Appreciate you taking the time to be with us here. And so today what we want to talk about is really helping people understand, their first home purchase. And you've been really helpful in not only a lot of my clients' lives, but in my life personally, my family's lives, and helping us acquire property. And so I think where there's a lot of misunderstanding or misconceptions is just really at the very beginning stages. So I'm hoping we can shed some light on those first-time home buyers, again, help them understand the process, help them understand, when to get someone like yourself involved, and also the difference between going to like their bank compared to going to a real mortgage broker that has options out there. So
Sure.
Before we dive into all of those, can you take a minute to just give everybody a little bit of an understanding about your background and who you are and what got you into the mortgage business?
I've been in the mortgage business since 2001.
Okay.
So, we're on 23 years or something like that now. And I've worn a lot of different hats. I'm from New York originally. I came out to California in 2005 as part of the mortgage business there. And when I came out to California, I ran 6 states in my territory. I had 60 different salespeople that worked for me. My team was doing over $250 million in production. I was working for one of the biggest mortgage lenders in the country. And then I did that, traveled through all my states for probably about 2 years or so. And then in 2007, I moved over to IndyMac Bank, which is a bank that people know more locally here in California. And frankly, it was the only bank that was allowed to fail in the crash.
Okay.
So, I've worked through the crash. I've worked through, highs and lows. Been in the business for that entire time and, had now my own company since 2009 is when we started dealing directly to consumers, and then been here in Huntington Beach since 15.
Got it. So you've seen a lot over those years, and going through something major like that 2008, 2009 kind of crisis. So it gives you a lot of experience and knowledge to be able to, again, pass along to people of what they need to be aware of. So awesome.
To say the least, I've seen a lot. Yeah.
So, okay, let's start from square one. Somebody's deciding, hey, I want to start saving for a home. Like I want to buy a home. Where do you really think that they should be starting?
I mean, so it's a tough question to say one specific thing, and I think it really all begins, in my opinion, with if you are thinking about buying a home at any point in time in the next, call it 2 years or so. It's worth having a conversation. In addition to if you need to make a change in your living situation. Hey, I want to go out and move out of my parents' home and rent. Hey, my lease is coming up. I need to find a new place to rent. If you have any of those two things, a thought about wanting to buy the home in the next 2 to 3 years, or a life change in my living situation coming up, it makes sense to have a conversation with a mortgage professional that you trust, maybe even have more than one conversation with more than one person, to understand where you sit today, understand if that allows you to even accomplish any of your goals today, and then if not, establish a plan on where you need to be in the future.
No, that's perfect. It's kind of like for financial planning. We find out where they're at today, where they want to be. How do we get somebody there? So in terms of talking to people, what are one of the common misconceptions or things that you hear from people at the very beginning stages that is able to maybe accelerate their first time home purchase, or something that they weren't aware of if they hadn't have talked to you sooner?
I think a lot of the conversation goes around, I guess, 2 key points. And one, people are massively afraid of rejection or embarrassment. And then on the same token, that triggers a statement, which could be bona fide or not, that says, like, we're saving money still.
Right.
So it's this 2 pieces here. We're saving money still, so I don't want to have this conversation and be rejected or told that I don't qualify, or maybe I'm embarrassed about my profile or whatever that might be. I'm not ready, because they have this preconceived notion of what ready looks like.
Right.
And that could be what their parents did or what their friends did, or they think they have to put down 20%, or they think the home price is going to be high, or they think they need to have more savings. They have all these thoughts. And the internet tries to do a good job in a lot of times, I think, expressing things.
Right.
But it's really never done in a fashion that a novice can fully determine themselves and diagnose their own situation. So I think that that's kind of the main 2 pieces. And we can spend more time on those.
Yeah.
But those are the main 2 things I think caused the concern.
Okay. Yeah, let's spend a minute on, because the 20% down is, I feel, a big, obviously in Southern California, a barrier if you're trying to put down 20%. Average home values are around $900, almost $1 million around here. So that is a big barrier. So obviously there's ways around that, right? Especially for a first-time home buyer. So can you spend a few minutes talking through that?
Yeah, I would say, without me having the stats in front of me, and we can look at it, but majority by far, the lion's share of first-time home buyers are not putting down 20% from their own funds that they've saved up to buy a home anywhere near here in California.
Right.
Most first-time home buyer purchases, period. That's an older opinion or an older thought. People have these thoughts, well, then I have this mortgage insurance, and they think it's so expensive, and it's not. And at the end of the day, you have to look at your total housing payment, how much your principal, your interest, your taxes, your insurance, your mortgage insurance, your total housing payment as a homeowner is, irrelevant of the categories, and make sure that that's comfortable for your life in comparison to what other home bills you might have. And so from that perspective, most first-time home buyers are not putting down 20%.
Right.
They're going to be putting down anywhere between 3.5% to maybe 10% on most scenarios. Now, there are the occasional that have gifts from family.
Right.
They have savings. They've had great income. They've been able to save for an extended period of time, and they're now in the position to want to do things. Maybe they got bonuses or stock awards or got payouts, different things like that. But most people are not. So from that perspective there are also a lot of programs available that allow for down payment assistance, not as a reward for you being a first-time home buyer.
Right.
They're not like, hey, congratulations, you're a first-time home buyer. I'm going to give you something for free.
Okay.
No. They say, hey, because you're a first-time home buyer and because you make good income, you have good credit, you pay your bills on time, you pay a high rent, you don't have the ability to save the down payment to buy a home.
Right.
But if we took that same payment that you're making on your rent, as an analogy,
Right.
you could afford to own this home here. So we're going to lend you, give you assistance with the down payment.
Okay.
So generally the terms on the first mortgage are not as favorable as if you put down 3 or 3.5%.
Right.
But they're going to give you that 3.5% that you don't have. So you become a homeowner.
Got it.
You see the benefits of the appreciation of the property. You see the benefits of paying down your mortgage balance.
Right.
You're paying yourself. And then in the future, when you refinance or sell a home, you pay off the assistance that you were given.
Right.
It's not egregious. It's not super expensive, but it's not better than if you had the money to put down.
Right.
So, but once again, it's about starting. It's about getting into it. And I can just kind of keep going here, so you're gonna have to stop because I can just keep talking.
Well,
so.
no, because I'll have you pause for a minute because I think that is a big component of getting started, right? Just with investing, it's all about starting. The hardest part is getting started. And in real estate, especially within Southern California, we see so much growth because it's such a high demand to be out here. And so I think getting in is really important and trying to time the market and time when prices are going to go down. People have been trying to do that for the last 3 years and are missing the boat.
Last 50 years. I mean,
So I think that, again, understanding your options of what can get you into a home, because like you mentioned, the mortgage insurance, things like that, as the home appreciates, you can refinance and take those things off too.
Correct.
So that was one of the things that we weren't aware of when we first bought our home a while back, and so it's just something nice that the more knowledge you have, again, then the better decisions that you can ultimately make.
When you bought your first home, how much did you put down?
3.5%.
3.5%.
Yeah, we did FHA 3.5%. That was in 2010 or 12 actually, 2012, and so I'll kind of paint the picture of the scenario we were in. Because I feel like it's probably similar over the last couple of years because I feel like it's that way a lot of the time in reality, but very low interest rate environment. But we were going up against all cash buyers in every single house. And we were looking at homes and there were going to be anywhere from 7 to 10 offers on there, 2 or 3 of them cash. And I want to say we probably put in 7 or 8 offers. And then finally we had one that went through all the way, and we've been in that home ever since. But again, it's just a challenging environment to be in when you're a first-time home buyer. You're a little, I think, discouraged, but that's it takes more offers to really get an offer accepted. And so it is something where I think you want to start sooner rather than later, and understand that, hey, even if you find a house that you get really excited about, especially being a first-time home buyer, you might just need to make sure that your emotions are in check and just ready to take a little bit of a ride at the very beginning, because you know, again, it's your first home. You get emotional about, I really want this. You can picture yourself there, and then a cash offer comes in. So
so let's pause there for a second. I'm going to flip the table now. Now I'm interviewing you, because this is a great conversation, because it's the legitimate scenario that you're trying to talk to, right? So you bought the home with 3.5% down. You were probably somewhere in the 5% range on mortgages, but in any event, was that payment comfortable for you guys, or did you feel like it was a stretch for your family?
At the time, it felt bigger. I mean, it definitely, because going from renting, you know, a small one-bedroom place in Redondo Beach to a mortgage payment, it was definitely scarier. But looking back, it's, you know, it was the best decision.
Great. So you bought it in 2012. Percentage-wise, how much has your home appreciated? How much have you made in the last 12 years on your home?
Oh my gosh! So it's gone up 300%.
Yeah. So it's worth like 3 times what it was worth.
3 times, yeah.
Okay.
Yeah.
And the payment was more than you could afford, or felt comfortable with.
Yeah.
It
was a stretch.
It was a stretch.
Paying rent, 100%.
Okay. You put down 3.5%, and you've made 3 times on your money.
Yeah.
And then that property has afforded you the ability to do what things in life? Did you refinance and pay off debt? Did you refinance and take down and buy a new home? Did you do anything with the property along the way?
Yeah, so we've done what is common, I think, with a lot of people, is they'll take out equity from their home, and then we purchase an investment property. That's been able to, which we turn into an Airbnb, which has great tax advantages as well. So that's something that we've done and utilized to continue kind of growing, you know, just our own portfolio. Really important thing that a lot of people, again, don't consider is how, you know, taking on a mortgage, yes, it can be scary at first, but having the leverage of your money working for you within real estate over the long term is really, really beneficial. And you can't really get something like that outside of real estate.
Sure, and it didn't like 3 times overnight.
Right.
I mean, we're talking about a 12-year period here.
Right.
That's afforded you the ability to be able to buy additional properties, afforded you the ability to pay off some debt, afforded you the ability to be able to receive the tax benefits of it.
Right.
But, you know, you took the first step, which is the hardest, which says that, hey, listen, I only put down 3.5%. I had a payment that was maybe a bit higher than I wanted, but something that I could afford. And then as your income increased, it became a smaller portion of your income. You receive the tax benefits of it. And then it's afforded you to continue doing these other things in your life. But if you would have waited to save 20%, home prices would have continued to appreciate as they do year over year. And you wouldn't have been a homeowner starting to receive those other benefits. So I think it's like the perfect story for what you're trying to talk to me about. So I apologize for hijacking this on you. But it's the example of what we're saying.
Yeah. And I think one other important thing to mention too is that it allows you to grow in terms of like your family, or if you need to, you know, increase the size of your home eventually. It's going to make that easier, again, in terms of you get started in a starter family home or a starter home, and as the real estate prices go up, you're getting more equity built into that home there that you can then transfer if you need to buy a new home, you need a larger home, things like that. So there's a lot of benefits around it that again, just getting started is really the most important thing. Let's take a step back. I think those were all really great points, but let's help people understand really your role in the home buying process. Obviously, I think you made it pretty clear, like at the beginning, just an understanding, a conversation to understand where they're at, what they have the options of in terms of what programs they could get into, what would be beneficial for their situation, what type of place they're looking at. But tell us a little bit more about how you're involved and what that looks like throughout the process.
Yeah, and I think just to kind of come back and put a bow around just when the call should happen, you don't have to be ready for the call.
Okay.
You don't have to have felt like you're in a job interview. There isn't like a spot where all us mortgage professionals go and just like post all about Paolo and his profile and like he didn't qualify today, right? And like, so there isn't that fear of that first conversation. If you have one of those two kind of things unfolding in your life, like I talked about earlier, you want to start that conversation. So what does the role happen? Well, I could speak for us as an independent mortgage broker and banker. When you're speaking with myself or someone from my team, The first step, in my opinion, over my years of experience, has really boiled down to, let's have an initial 10-minute conversation. Let's learn a little bit about you and your goals. Let's learn a little bit about your profile. Let's see where you sit today. Let's see if you could be comfortable with that payment range, if potentially you have that 3 to 3.5% to put down, or enough income to qualify, the credit profile, which can be a lot lower than what most people think, is enough to qualify, and like where you sit today, and if that sounds reasonable. So a lot of times a conversation may go something to the effect of like, hey, listen, based off of what you said your income is, based off of what your credit looks like, based off of what your down payment is or what you have to work with, you maybe can qualify to buy a $400,000 home.
Right.
Do you feel like buying a $400,000 home, a $400,000 price point, is enough to get you a property in the areas you want to live?
Right.
And we can make a connection to a great real estate agent or someone like that where we go, hey, listen, where you want to live in the neighborhoods, $400,000 is actually enough.
Right.
So then we would take the next step of saying, let's review some of your documentation. Let's take a look at those income docs to confirm what you said your profile you think is, we see from an underwriting perspective.
Got it.
So that might be a 10-minute conversation, and then 10 minutes by you in a computer, downloading, uploading, and sharing with us some documentation. So then we can come back and go like, yeah, like this is what it looks like for you today. Now, if that price point for $400,000 isn't enough, well, then we can look at, okay, well, if you want to get to $600,000, here's what needs to happen. Maybe we pay off a little bit of this debt. Maybe we have a little bit more of a savings. Maybe we need to have more income. Like at the end of the day, maybe you need to earn more or bring in a cosigner.
Right.
So we start to establish that plan so you know what the steps would be for you to get to 600 if you're only at 400 right now.
Right. No, that's good. I mean, again, it starts to create a path of when can our kind of goal become a reality, right? And so in talking through, like, once you've had the conversation, you've gotten all the documentation, you're able to evaluate what is out there in terms of options. What's kind of the difference of working with you compared to going to, I remember our first house, I went into like Wells Fargo Bank. What's the difference between working with somebody who is independent and compared to working, with a large bank?
So I think there's a couple different layers there. And just being fair and saying like, hey, listen, there can be great people that do great stuff working with lots of different places, whether it be a large bank or not. First and foremost, it's the conversation you're having with the person that you're working with.
Right.
That's fundamentally the most important aspect of it. Beyond that, when you go to a bank, the bank only offers their products and their programs.
Right.
And they may fit some people,
Okay.
but they may not be the best for you.
Right.
Where you're speaking with someone that's independent like us, we have a network of over 70 different investors that allow us to find the best product, the best program, and the best price, aka interest rate, to meet your needs.
Got it.
And really customize the solution for you. Meaning you tell us everything and we figure out like, hey, how do we put this puzzle together under which of these programs? Maybe that is down payment assistance. Maybe that is FHA. Maybe that is a jumbo or a portfolio or a guideline that we have to maximize. Okay. So it's really that consultative approach. And then we have the ability to shop not only the bank that you probably walked into, but all the others and people you've never heard of that do mortgages exclusively that will be able to probably be a better option for you and your needs.
I think that was great because for me being an independent financial advisor, I mean, that's one of the reasons that I went to go be independent is to have access to options out there that I knew existed that at the firm I was at previously was restricted from using, right? So I think that's really helpful. And again, it goes to the ability to understand the home buyer, the individual, what their goals are, and then finding what's going to be the best fit for them and their situation. So from that process then on, you find a home. I guess you get pre-qualified with you, and then you find a home, you start putting offers in, something gets accepted. Tell us a little bit about from that point on.
Yeah, and so I don't know how much time we're going to have and how much detail you want to get into, but I think it's important to take a step back here and say that most people don't recognize how much of an important role the lender plays in getting your offer even accepted.
Okay.
Because most people just think like, hey, listen, I'm going to submit the offer, and that agent's going to just accept it based off price. They don't accept it just based off of price.
Okay.
We have a property right now that's in contract today that our buyer is buying the home for $20,000 less than another offer that was submitted on the property.
Okay.
They were submitted at the same time, multiple offers. Our offer was accepted. Why? Because of the terms that were associated with that offer. Frankly, in addition to the fact that we were the lender on that transaction.
Got it.
Because the agent wants to make sure, the agent's job is to not just get the highest price, but make sure the property sells for the highest price. And when we start to factor in certain things like how long is the closing period? How long is the escrow period or the contingency periods? How likely is it that the lender did the right job to make sure the borrower is fully pre-approved and will close? So the terms that we associated with that transaction, the confidence that we were able to help instill in the listing agent in order to make sure that they knew that when they accepted our offer, that it would close on time, at the price, etc., is why they determined that they wanted to accept our offer. So the lender plays a crucial role in that process. So yes, we have the conversation, 10 minutes or so. We gather the documentation. Takes you 10, 15 minutes by a computer. We fully underwrite and review the file, which is unique. Not everybody does that, okay? We make sure you're bulletproof so we can instill that confidence in the listing agent. Then we help to establish and negotiate those terms with the realtor that's submitting your offer to make sure you put your best foot forward.
Awesome.
You get into contract. Then from there, it's a full steam ahead, right? We have to do certain things like getting that appraisal order within a certain period of time, working to make sure we meet that loan contingency, probably updating a few documents depending on how recently we pre-approved you. Maybe we need a new pay stub or a new bank statement, stuff like that. And then, we're locking your interest rate. We're going over those terms, which, yes, we expressed in the beginning during the pre-approval process, but rates don't get locked in that pre-approval. Rates don't get locked until you're in contract to purchase a property. So, hey, we're reevaluating where prices are today, what that looks like for you, what your terms are, refreshing you on all the details we gave you earlier, and then full steam ahead to start to make some of these timelines.
Yeah. I will say one of the things that I've appreciated in working with you, because you helped us with our Arrowhead property, was how much of an explanation you gave about everything in advance, like going through all of that. But then even as we were going through and closing, just like signing the documents. I remember the first time we bought a home, again, you get a stack of pages like this thick, and we're just like going through and signing and just think about how we're signing our life away. But when we did our mortgage with you, you had a video that went through and explained everything. And when I signed for our first house, I was just signing and just thinking, dear God, this is
I hope
scary.
This is right. Yeah.
Right. But with yours, there was like a video explaining everything going through. I knew what I was signing. It was just a way more comfortable experience. And even I think I mentioned my wife was like, this is incredible. I am so happy that he put this video together for us. And
it's personal to you.
Yeah, exactly. Yeah. No, so I appreciate it because it does make, again, especially for a first home purchase, you're just, a little bit overwhelmed, and you see how much money you're spending or the mortgage payment that, that you're taking on. And it can be scary, but I think having somebody that you trust, somebody that's explaining everything properly, gives you more of the confidence that, like, yes, this is a good decision. I'm doing the right thing. And so I just wanted to tip my hat
I appreciate
at your
that,
process.
man. I appreciate that.
It was really helpful as we were going through that.
It means a ton. And like that's all birthed from the fact that when I look at those documents, I'm like, yeah, this doesn't say what it doesn't read what you think it should read like.
Okay. Yeah.
It's not this like very basic linear bullet pointed.
Right.
It's like, hey, 5 pages which shows numbers moving here and this total looks different than that total and what does this mean? So it's like we do that as you experienced in the pre-approval. Pre-approval, we're like, hey, listen, here's everything laid out, interest rate, cost, payments, terms, and a video personal to you reviewing what we've spoken about on the phone. And then you're in contract and we have all the disclosures. We do that same thing, personal video for you, walking you through, hey, here's how your loan estimate ties to what your expectations are. Here's how it really all lines up. Here's the important stuff. And then prior to closing, we compare the initial estimate video review to the final review to go like, hey, listen, we told you this and this is it. Like, here's how it works. Here's how it was. Because it should be a happy and a joyous time. You're buying a friggin' home. It's going to positively impact the life for you and your family. It's a huge financial commitment, but let's make sure that you feel really well informed and comfortable that what you expected is happening.
Awesome. Love it. So we've covered a lot. We've gone from literally, hey, I've got an idea, to we just signed and closed, right?
Mm-hmm.
So let's take a minute to talk about some common concerns right now. Obviously, interest rates are high. Home values are high.
Mm-hmm.
Can we just touch on that for a minute and give your thoughts on it from a new home buyer perspective?
Well, I mean, yes, but so I don't just ramble here. Do you want to narrow in on what you want me to address on that?
I think the biggest point would be waiting for rates to go
Got it.
down
Mm-hmm.
is, so yeah, I think addressing waiting for rates to go down or possibly thinking home values are going to go down.
Mm-hmm.
Either one. I think it's just a matter of waiting on either of these two things that may adjust. So maybe touch on those.
I think that it's unless you are a seasoned investor that is buying properties that have no impact on you and your family directly. I'm not living there. And you're a speculative investor that's trying to do those things. It's a horrible thing that people have a hard time understanding, but you're not going to time the market perfectly.
Right.
Ever.
Yeah.
You're not. You are going to trip into something was lucky. If you bought your home 6 months earlier, 6 months later, if you bought your home, you could have gotten a better deal. You've refinanced 5 times in the course of your life, reducing your interest rate, taking cash out, but the whole time receiving 3-5% appreciation on an asset that continue to compound over 12 years, resulting in 3x return. So people have to understand that you have to be comfortable with the payment. If you, might be a stretch, right? But if you can't make the payment, then you don't buy a home.
Right.
End of the story.
Yeah.
Right? Whether the rate's 3% or 10%, if you can't make the payment and you're not comfortable with making a payment, you don't buy a property.
Right.
But if you can afford the payment, it's always going to be a stretch for you.
Yep.
It's never going to just be perfect. The first start is always the hardest because, one, you're making the mistake of comparing your income as a renter versus your income as a homeowner is more. And the reason your income as a homeowner is more is because you get to keep more of your paycheck. So that's the first thing.
Right.
You get to keep more of your paycheck in your pocket as a homeowner because you get tax benefits and deductions for being a homeowner.
Right.
It's the first thing. The second thing is you have now a forced savings account. Every month when I make a mortgage payment, I'm paying part of my payment to pay down my loan balance, which is money that will come back to me in the future. So when we factor in those two dynamics, we can't just look at a linear rent to income comparison.
Right.
But to come back to your question here, interest rates are a driver for how many people are interested in purchasing property. The more people that are interested in purchasing a property, the more expensive the property is.
Right.
Simple. Supply and demand.
Yep.
We have, and I don't have the stats in front of me at the moment here, but let's go back in time a bit. It was like 90% of mortgages had interest rates of 4% or less, right? So from that perspective, those homeowners are less and less likely to sell.
Right.
And instead, unless one of those major life events happens, like death, divorce, childbirth, stuff like that, right? Job relocation.
Yep.
So they're not just casually selling. Especially in the areas that we live, less and less new homes are being built.
Right.
So inventory is always a challenge. As interest rates come down, more and more buyers come into the market, which further accelerates the appreciation. We saw the bottom of the market, which was depending on where you were, call it a 10-12% decline. By November of 2023, we had already recovered and surpassed those values from that little bit of a decrease.
Okay.
So in November of 2022, rates crossed 8%, and roughly October, November, bear with me. Okay. Rates crossed over 8% on average. Properties were on the market for a bit longer. People were, didn't know what was going to happen. The highest rates was the lowest price, which was about 10%.
Okay.
Since then, everyone kind of got used to the idea where rates are.
Right.
Home prices recover that little bit of that dip and have far surpassed that now. Even at rates somewhere in the 7% range for most home buyers. So, I come back to this. Hopefully I answered your question.
Yeah.
I come back to it and say, we know that rates today are going to be the higher level than where they will be in the next 12 to 24 months. Period. End of story. You can talk about this probably even better than I can, from an economic perspective. But as the Fed has increased rates, as inflation been being fought, all these different aspects that factor in, interest rates are higher today, without a doubt, lower than where they were a year ago, higher today without a doubt than where they're going to be in the next 12 to 24 months.
Yep.
So from that perspective, if you can afford the payment, you can get it home in the area that you want, this will be the highest your payment will ever be.
Right.
It'll be the most difficult your payment will ever be.
Right.
It'll be the highest portion of your income. It'll be the highest interest rate. Once you own that home, in the future, you have the ability to refinance and get a lower rate, reduce the payment, make more money. So hopefully I answered that question and didn't kind of just ramble too much on you.
That was perfect. And I think one other important thing that people tend to forget about too is once you buy the home, your mortgage is set. If you've got a fixed rate mortgage, right, your mortgage payment's going to be set. Rent can always go up, over time as well. But your pay is typically going to increase over time as well, right? So I think that's something that a lot of people forget about is that, ideally there's some job growth or, just you're getting increases with the cost of living adjustments over time that will help. And then that payment doesn't seem as large as it did at the very beginning. Yeah, right?
And then you're taking home more of your paycheck.
Right.
As a result of the tax savings. You have, a forced savings because you're paying down your mortgage loan. And then eventually, at some point in time, you're going to refinance and reduce that payment.
Awesome. Well, I appreciate you taking the time to go over this today. We're definitely going to be doing some more videos because I want to talk more about when is it right to refinance and when to evaluate that because, we do believe that interest rates are going to go down over the next year to 2 years. And so that'll be something that I think is really important to understand. So we'll do that video at another time. But if you don't know John Soricelli, he is a social media king over here. So make sure you take a look at his social media. He's got a lot of great content, a lot of educational information, stuff I learn about in terms of mortgages all the time. So I appreciate all the good material that you put out there. And thanks for letting us utilize your space. It's beautiful here.
Yeah, brother.
And look forward to chatting more again.
I appreciate it, man. Good times.
All right. Thanks, everybody.